welcome all to our first virtual event of the year, an insider look into VC venture capital. So we're extremely excited to have you all here with us today. My name is Sharon and I'm currently the events coordinator at Textbook Ventures. And I'll be moderating the panel today. So before we begin, just a few digital housekeeping rules. Please turn your audio and video off. If you do have any questions that pop up throughout our conversation, just feel free to comment them in the chat below and we can revisit them during Q&A. So if you haven't heard of us before, Textbook Ventures is a student-run organization that empowers students to take control of their own personal success stories. Now, I'm thrilled to introduce you all to Hart, a portfolio analyst at Blackbird, and Kevin, an investment analyst at Reinventure, who both demonstrate what it looks like to own their careers. So we'll be focusing on mainly the transition from uni into VC space and what it looks like to work in the respective roles. So before we jump into Q&A in the last 20 minutes of our session. So with that, I'll hand it over to Hart and Kevin to introduce themselves. Hart, would you like to go first? Hart?
Yep.
Sure. Yep, great.
Hi everyone, I'm Hart. I'm a portfolio analyst at Blackbird Ventures. I used to be, for 3 years, an investment banker at JP Morgan. I specialized in the FIG space and kind of spent some time delving into fintech as well. And actually only started at Blackbird earlier this year.
Great. So Kevin, would you like to go next?
Sure. Hey guys. I've been with the Reinventure for almost 2 years now. Before that, I was at university studying commerce and law, actually transitioning out of law into computer science. And during my time there, I did a few internships here and there in the finance field, in investment banking and asset management, and dabbled in personal investing myself.
Great. So it sounds like both of you had really interesting paths into VC, which I'm looking forward to digging into a bit further. But before we do dive in, Hart, would you just like to give us a bit of background on what venture capital is, and just for those who aren't too familiar with the space?
Yeah, sure. So in a nutshell, and without buzzwords, it's a type of private financing that we provide to earlier stage companies. So it could be anywhere from seed rounds or slightly bigger companies that are trying to scale. And it's usually companies with a longer term growth horizon. And so in line with that, VC investments are usually held over a longer period of time. VC money is pulled from outside investors. So you think of wealthy people, super funds, other institutional investors, or even corporate. And because VCs appear earlier in the stages of a company's life, there's a bit more uncertainty about its future. And so it's a bit more risky than some other asset classes. Because the idea is, if everyone knows and agrees that something is a good idea, it's probably a bit too late. In VC portfolios, it's expected that some investments do okay, some fail, and hopefully a handful go really blockbuster. VCs also tend to be a bit more than providers of just money. It kind of varies from fund to fund, but you'll also likely see VCs providing ongoing advice or perhaps being on the board of some of their portfolio companies. You'll also see them connecting their portfolio companies with key contacts in the network. VCs have their own mandates that differ from fund to fund. For Blackbird, we back super ambitious tech founders in Australia and New Zealand, or have an Australian and New Zealand founder.
Right. So just to reiterate, so there are also different structures that deploy capital in the VC space. So Kevin, could you just talk a bit about how Reinventure's structure differs from Blackbird's fund?
Sure. So there are kind of two distinct types of venture capital. One, institutional venture capital, like Blackbird, and two, corporate venture capital, like Reinventure. So Reinventure is Westpac's corporate venture capital. Essentially, with corporate venture capital firms, you really only have one investor, whereas with institutional venture capital firms, you can have multiple investors. You can have super funds, wealthy, high net wealth individuals all investing into that one fund. So the structure is a little bit different in the sense that we do have to take into account the strategic interests of the corporation that has invested in us. So for us, Westpac obviously is a bank, so we do focus a bit more on fintech investments, but we do apply a very broad umbrella to fintech, and sometimes have been cheeky enough to do stuff a little bit outside, but tangential. So yeah, that's the main difference.
Okay, great. So yeah, so that's really interesting to hear how Blackbird, invested in their portfolio companies as with Reinventure. So I'd like to chat more about your background and what you did, how you transitioned from university into the VC space, and what in particular led you to pursue your current role. Yeah.
Okay, I'll start. So going back, I guess, further, I studied finance and accounting in uni. And so kind of naturally with that gravitated towards the obvious role. It's kind of a bit because I wasn't good at science and I was like, what else can impress my parents? And so I interned as an asset manager after my first and second years of uni. And I enjoyed the equity research role, but I kind of wanted something a bit more active and more like impactful, I guess, on the companies, which led me to my investment banking internship, which I didn't love, but it felt like the best path at the time. And it was a path that everyone was doing. And so I thought it was kind of like the surefire way to do well after uni. I kind of stuck with it for a few years, learned so much in investment banking and really grew my network. There's nothing that builds friendships and all that than struggling together in an investment bank. So that was an interesting few years and I got exposure to a lot of really cool companies. Actually did my last project was a fintech, which is coincidental with Kevin. And kind of during that process, I kind of opened my eyes to a world outside of FIG and fintech into regular tech. And I met a bunch of people within the community itself. And it led me to Blackbird. A bunch of people and coincidences led me to Blackbird. And I realized that there was such an awesome place to kind of put to use all the finance technicals that I've learned over the years and to really meet such a flourishing industry in Australia and kind of support all these awesome businesses as they grow.
Right. So yeah, Kevin, would you like to just go us through how?
Sure, absolutely.
Yeah.
I'll dig back a little bit deeper. Way back in high school, actually, our English teacher got us to watch Steve Jobs' commencement speech at Stanford in 2008 or 9, the year he passed away, unfortunately. And that was really moving for me, hearing about his story and how he built a empire and products that we use daily. So I wanted to set myself up to go down that path of being a founder. But I didn't really know where. There wasn't an entrepreneurial degree at university. So as any good Asian kid, I did commerce and law at University of Sydney. And the first year, I really wanted to get some experience in investing. I just wanted to make a quick buck online. And I actually deposited my first Centrelink check that was meant to be for my textbooks into penny stocks. And 2 weeks into my first investment, I made, it was like $200 off a $1,000 investment. And I immediately quit my retail job. And I was like, damn it, this is what I want to do. This is super interesting. And so from then I dabbled in a finance major, and I wanted to get some more investment experience from actual firms. So I wanted to learn from the best. And I thought, why not try out investment banking, investments in its name, right? Little did I know that there were two sides to general finance operations in corporations. There's the sell side and there's the buy side. And with investment banking, I was learning more about the sell side than the investing side, the buy side. And so it was a fun experience. I did a little internship in Los Angeles with a boutique investment bank, but it left me hungry for more actual investing experience. And so coming back to Sydney, I sought out a few investment management internships at a small cap asset management firm, and that was super interesting. The work that they did felt more like detective work per se, and I really dug that. So at the end of my third year, I realized law wasn't really for me, and I transitioned into computer science, having finished my commerce degree. And at the end of that first semester of computer science, I was lucky enough to stumble upon venture capital with Reinventure at a particular event talking. And I was lucky enough to get an internship there full time, and I just dropped my university obligations and traveled down that path. And it's been a blast ever since. The exposure to the founders, my mentors, it's all been an amazing learning experience, and supporting them in their journey to create amazing companies has been really fulfilling for me. And late last year, I was able to transition to a full-time analyst role. So it's been business as usual up to 2 months ago when COVID-19 started. Yeah, that's me.
Great. So yeah, so from what we've gathered then, we know that every day in VC can look incredibly different. Could you just talk us through what your daily goals are as a portfolio analyst or investment analyst?
Yeah, I think the overarching goal is to help the partners make good investment decisions and making sure that they have kind of everything they need and have a prepared mind to make those decisions well and fast. And of course, to sharpen our own investment acumen. Lots of things go into this. It could be helping them research a certain market, or it could be helping them write investment memos. It could be doing deep dives into new valuation techniques that some really popular venture capital firm in Silicon Valley has proposed, or benchmarking. So there's lots of different things that can come out of it, and sometimes it's also kind of keeping up with the portfolio companies and just making sure you know everything that's going on and can help however you can. But I think the overarching theme is kind of to facilitate good investment decisions and kind of supporting that throughout.
Yeah, absolutely. I echo that. It's all about really supporting the partners and supporting the founders. I can separate my tasks into 3 buckets. Investment analysis, that being just analyzing incoming prospects, meeting with founders, going to demo days, going through customer calls, all really trying to understand and present good quality data so that the partners at our firm can make the best decisions possible. The second bucket is a portfolio strategy, and personally it's one of my favorite buckets of activities that I get to do. That is to actually work with the founders. So in venture capital, the investment part, figuring out whether we should invest in it or not, is only really 10% of the journey. The other 90% is actually growing with a company. And that's, I guess, the difference between your general passive investing and active investing. And in that second bucket, I've helped, it's almost like a consulting role. I've helped companies with their market entry strategies, their capital raising strategies, and just help them discuss product ideas generally. And that third bucket is just internal support, helping partners with their presentations, with the investment committee papers, that type of stuff. Yeah.
Yeah. So what is the most challenging aspect in regards to your role, would you say?
I think the most challenging aspect is the fact that a lot of stuff doesn't have precedent. I felt like with investment banking, most things I had to deal with were public or really well researched, or like there are 1,000 broker reports on it, and so it's pretty much just like taking all these ideas from people that's already been really well baked, and just representing it. Whereas in VC, it's a lot of like, what? What is that? And kind of trying to figure out a way to approach new things or answer questions about valuation that of a company that hasn't been valued very much at all or never in public markets. And so it's a lot more thinking creatively about finance rather than your typical the stuff you see in your finance classes. There's just a lot of like to figure out how to attack it.
Yeah, and on top of that uncertainty and dealing with just a lack of data and precedent, the pace of it is incredible. There are constantly new startups popping up here and there and across multiple industries. And so just keeping up with, I guess, these industries as well as these startups can be difficult. I guess with Reinventure, I'm a bit more lucky in the sense that I only focus on one industry, fintech. With Blackbird, it's probably much harder in terms of keeping on top of everything else. So yeah, definitely the pace and the uncertainty are the most challenging aspects of venture capital.
And what is the most fulfilling aspect about your role?
I think being part of the lives of these really, really awesome businesses where like the founders are so passionate and this is clearly their life's work, and you're kind of helping even a little bit in making that come true and making sure that it touches as many people as possible, and just kind of working with really great people. I work for some awesome partners who I really look up to, and being able to do that every day is very rewarding.
Yeah.
Hmm.
Yeah, absolutely. The people really make it. Sorry, go on.
Oh no, you go. Yeah.
Yeah, the people really make it awesome. As well as, I guess, the ideas that are spread. It constantly stretches my thinking day to day, and that challenge of every day not being the same, I find quite enjoyable and fulfilling.
So given what we're experiencing currently with COVID-19 and the current conditions, how has this affected your role and your firm and your portfolio companies? How are you dealing with these strong economic downturns?
I don't think the role itself has changed very much. As you've probably seen, most companies right now are just trying to make sure that they can number one, ride out the storm. So making sure they have enough cash, or they're closing the rounds that are currently kind of in market, or just making sure they can extend their runway as possible. I feel like you probably hear these things being repeated a lot in the news. And kind of just like, you see some startups pivoting to try to make the most out of the current situation as well, which is great, and trying to help them figure out how to do that and how to manage all the crazy stuff that's going on. But I don't think the role has changed very much, and it's just a matter of helping them plan for the next few months.
Yeah, for me, the role has shifted to a much more internal focus. We're much more cautious about making new investments, and if we are to, they will be held to a higher threshold. Preferring sectors that are more defensive, and especially in these conditions, we're looking to protect our existing portfolio companies and kind of allocating a bit more budget in our reserves to them. With our portfolio companies, they're doing everything they can to really ensure that they can sustain their business and manage outcomes for their employees. It's unfortunate to say, but some of them have had to make cuts. But the JobKeeper rollout has been helpful, and there have been creative ways to avoid cuts, like rostering in specific ways with 7-day fortnights, or using employee share option plans to subsidize wages. So yeah, there's been a lot of cost cutting, negotiating fixed costs on software. There's been a larger focus on product development, which I find has been interesting, rather than sales. And a lot of them are trying to figure out creative ways of maintaining a team culture, like streaming Zoom cooking classes, workouts, and even jumping online for a game of Fortnite.
So what are some trends that you personally see from the second and third order effects and that you've been following closely? And how do you see this panning out in the future?
To be honest, I really struggle with how everything's going to pan out because there are lots of obvious changes in consumer behavior, like everyone's on Zoom, everyone's doing online workouts and all that stuff. But I really wonder how much of behavior changes in the pandemic will actually permanently change how people like live and work and the structure of the economy. Generally, it's just a really sad time for a lot of business, but it's just really inspiring to see how lots of businesses kind of adapt. You can look on this online, or I can share some articles, but you see like during the crisis, like 2008, you see a lot of companies who found ways to be more efficient with less, and when everything died down afterwards, they were able to kind of really come back stronger than ever. And so that's a promising way of thinking about it. But in general, it's really cool to see how people pivot. And from a more data perspective, I'm keen to see how earnings season is coming up. So I'm just keen to see how different tech companies have been actually affected, because there's a lot of estimations and a lot of forecasts about how much they've been hit, but no one's really actually given up numbers yet because they haven't reported. So that's one good thing. It'll be good to keep an eye on.
Yeah, just adding to your point about how companies in 2008 and 2009 responded. Slack and Airbnb were both birthed in that area, that time frame. So it's not impossible for great companies to be born out of chaos. So yeah, again, like with Hart, it's tough to see how this really plays out. I hope with healthcare, this will catalyze a lot of innovation. I hope that the existing faults in our system, like the fact that ER lines take like 3-4 hours to service, that nursing homes are constantly understaffed, and sometimes waiting an hour at a clinic for a GP only leads to being referred to another specialist. I hope all these issues could be solved with this focus on healthcare right now. I think there will be like 3 probably key developments in healthcare. 1, access. So telehealth solutions are becoming faster and people can access telehealth from anywhere. 2, data consolidation. It's interesting how there's no central repository of all your healthcare data. Like your data can be scattered across specialists, across GPs, and if there were one, it would be helpful in making diagnosis much faster and potentially getting to people who are at more risk of COVID-19 faster. And the third piece is finance, where I think healthcare isn't completely free across the world right now, and governments could really play a big role in changing how healthcare can be funded. Outside of healthcare, fintech has really been armed with purpose a bit in terms of helping people and businesses access government claims faster. Banks have done their fair share as well. I've seen the CBA app that they have similar functions to help businesses and people access support quickly. And it's been interesting to see digital transformation really pick up. So, quick fact, Instagram was famed to have reached 100 million users within 2 years, and they were the fastest at that time. And then Fortnite came along and reached that point in 18 months. Now Zoom has gone from 40 million users to 200 million users in 3 months. That's incredible. I think we're also seeing the defensibility in online gaming. Twitch, League of Legends, and Discord have all hit record levels. Online gaming feels like it's the new sports bar, and it's turning out to be one of the most defensive sectors in a downturn. Mostly, I'm praying that my favorite restaurants do survive this period, and with the recent rental guidance coming out from the governments, I've been more hopeful.
Yeah. Yeah, so we can, yeah, as you said, clearly there are people benefiting from COVID-19 with, yes, Zoom, the success of Zoom in particular. So I'd just like to talk more about how your individual companies have kind of dealt with the situation so far. So as you said, you've had weekly get-togethers, is that right? Yeah.
Mm-hmm.
Yeah.
Yeah, so for Reinventure, we've been trying to help get our portfolio companies as much government support as quickly as possible. Been in contact with some of the people that are closer to the policy creation inside the government, and just helping some fintechs lobby for some more support. Other than that, we've been helping some of our companies actually get more sales through the door through converting some of their call center teams to Westpac white labeled call center teams so that they're still getting money through the door.
Right. Hard, do you have anything to add to that?
Not more to what I've said, except for maybe you can kind of see the strength of the community really shine in this kind of situation where there are lots of connections being made for people who've been laid off as a result of the current situation, like being able to connect different people in the ecosystem.
Okay, great. So I've just got a question. So in terms of your journeys in particular, so what were some transferable skills or experiences that you had in uni that have translated well when you've applied to VC?
I can start. This is a tough question because I feel like it applies not just to VC, but like any job. Everyone else can kind of chip in as well, but I think the biggest thing from uni was soft skills, like presentations, like being able to kind of synthesize information well, being able to learn quickly, all that. I don't genuinely feel that university finance was a huge help in terms of like my work life, but kind of the soft skills I picked up in like joining clubs like these and the networks and relationships I built doing extracurricular stuff was awesome when I actually started work. And yeah, I think lots of like work stuff at work you kind of learn on the job, not just in VC, but in any other job you take out of uni. So you just kind of keep that in mind. Yeah.
Yeah, I think you nailed it there, Hart.
Is that sad?
No. Yeah, like definitely for me as well, the soft skills that I picked up at university societies were invaluable, as well as the network and relationships that were built in university. The finance stuff, yeah, again, doesn't feel that applicable. I feel like a lot of it you learn on the job. I think in venture capital, they don't expect you to come in knowing everything, and they understand that it's a steep learning curve. So there's leeway for that. Yeah.
So yeah, so before we do jump into Q&A, do you have any general advice for students who are interested in pursuing a career in VC or entrepreneurship in general?
I think start early. Not even if you're not, if not like actually trying your own startup or working at a startup. Oh, sorry, I don't have a shared office situation or working at a startup. It's kind of maybe interning for one or learning about the business models or learning about the actual industries. People like to see your passion shine when you enter, for example, if you're trying to recruit for a VC job, and really leverage your networks. Like, don't be afraid to reach out to people. There's lots of people that you can reach from like LinkedIn or Twitter or whatever. And people are usually pretty open to being reached out with. So definitely just be brave with that kind of stuff.
Yeah, people in VC come from many different backgrounds, so don't be shy if you don't have a finance background or you haven't worked in an investment bank or management consulting firm. There are many paths into venture capital. You could be there are people that come from startup product roles or tech roles from big tech companies that come in. For me, there are probably three things that I'd recommend. Kind of echoing Hart's points here. Finding out more about the startup world through reading articles and blogs. One I would suggest would be A16Z. They have deep archives on the very active industries that startups are in, and the podcasts and listening to podcasts. A podcast that I would recommend is 20 Minute VC. They do really good, snappy stories of founder journeys. The second piece I would recommend is, finding potentially a startup role. In these conditions, people may think it's a bit more difficult, but startups are always looking for talent, and there are plenty of roles probably still available across both the Blackbird and the Reinventure portfolio. So dig into that. And third is potentially getting some investing experience. It doesn't have to be angel investing or that much money that you put into the stock market at all. But I think dabbling in investing and developing an investor mindset is important in this role. Yeah, that's me.
Great. So these were really incredible insights, and I really enjoyed learning about your journeys. And I'm sure the audience wants to learn more about more from the two of you. So I think we'll jump into Q&A now. So the first question comes from Aki. So as for the future, what are you most excited about next, specifically in terms of your own role?
Personally, for me, it's just to get to know people in the ecosystem better, just because I've been in VC for such a short period of time. And I know there's a huge network of startups and founders in Sydney. And I just want to meet as many people as possible. But I guess down the road, it's kind of progressing in terms of being able to kind of look into my own investments and help more of like the decision capacity. But yeah, step one is just to get to know everyone, which is a bit tough in this current environment.
Yeah, personally for me, having been in the VC community for a little while, there's still much more to learn. To this day, I'm still learning day to day about new investment opportunities, new ways to think about how to solve key problems. And for me, it's still about developing that network. As a next step, probably it would be to look at more global prospects, particularly now in Southeast Asia. I think that market, that geography is really heating up. But given the uncertainty of COVID-19, it may be a while before that happens that I get to look at more prospects overseas.
Yeah, so just to add on from that, where do you specifically see yourself like in the next 10 years or so? Do you see yourself still in your role, or do you want to expand out? Where do you see yourself?
I would hope not in my exact role in 10 years. I would hope I would still be with Blackbird in a more senior capacity. But I don't know, every time someone's asked me that question for years, I've always had an answer and it's always turned out different. So hopefully still investing in awesome companies with awesome people, but we shall see.
Yeah.
Yeah. I mean, if you asked me that 10 years ago, I would have answered I wanted to be a lawyer because I was watching Suits at the time. So yeah, answers definitely vary. But for me, I think I want to take a lot of the lessons that I've learned from my team and the founders that I've worked with to eventually be able to be a founder. And then after that journey, I do hope to come back to share my lessons with the VC community more broadly.
Great. So Jeffrey's question is, what is your most interesting investment in your portfolio that is public?
Well, I haven't had an investment in a long time considering my past role, but I would say in the past when I was in uni and I could invest, I kind of, this is probably worth a completely different discussion, but my favorite investments were companies that I couldn't live without. So for me, it was Amazon and CVS, which was a pharmacy, but also served food and everything you could ever need in life. And so I felt like I needed to own these companies that I love so much. And if I held them back, if I still held them, I would have been in a very good place today. I don't, I have nothing.
Yeah.
For me, in terms of personal investments, for public market investing, I think my first investment that got me into the entire game was my favorite. At the time, it was a lithium stock that supplied lithium to electronic car manufacturers. And that really blew up, but I sold too early. I could have made much more money, but I didn't. But in terms of my favorite investment, that is at Reinventure, we invested in this company that was actually founded by a friend of mine called Immutable. So they are a blockchain gaming company that help gamers actually make a living off gaming. I won't dive into the weeds of it, but essentially they have created competitors to Steam, and they have been able to tokenize in-game items so that people would sell them, and that so that these items will never really lose too much value, and they take a cut of the in-game transactions as a business. But yeah, being able to invest in a friend was an absolute privilege, and it's been awesome to see his company grow, particularly in these times.
If I had to add a Blackbird portfolio company, it'd be Safety Culture. If you ever want to see like a really gritty and super passionate founder, look up Safety Culture, look up a podcast of Luke and Nir, and it will be a very inspiring story for you.
So we've got a skills question here from Brian. Are there any specific skills you get to really develop in your VC role?
Kevin, you should start first considering your years.
I think what really develops is your first principles thinking, just because the lack of data you have, the uncertainty you face, it really requires you to really dig deep into what assumptions you're making when considering an investment. So first principles thinking is super important for us, because a lot of the things that you will be assessing have never really been assessed before by anyone else. And so there isn't really a playbook to go by. So yeah, first principles thinking. Second, the ability to be able to distill complex ideas. Given the pace of VC and the complexity that sometimes startups can bring with their solutions, it's important to be able to simplify the complex, so that you're communicating effectively to your partners who are probably running through tens of different startups a week. So that aspect of communicating effectively has definitely been something that VC has helped me hone. And the last thing is really just what it means to develop a real business relationship. It's much less transactional, and a lot of relationships developed in VC. They say that when you get venture capital money, you're essentially entering a marriage, and it has felt true in many ways. Sometimes my partners message their founders more than their founders message their girlfriends. And so that has been interesting to see how tight that relationship has been. Yeah, those are the three key things that I have seen and developed in my time in VC.
Yeah, that was
So,
elegant.
do you have anything to say?
No, I just said that was elegant, and I'm probably more well placed to answer the next question.
Okay, right, great. Okay, so from Jeffrey, what skills or experiences did you learn in investment banking that has helped you in your VC role?
Yes, investment banking teaches you a lot of very applicable, practical finance things. You get exposure to all of these valuation approaches. You get exposure to kind of how to conduct research and do it in a very like apprenticeship kind of environment. It's double-edged sword of having all those different layers in banking, but you actually kind of get to learn really well because you're always surrounded by people who are kind of has just been there, or you can very easily ask that there's a massive like community to learn from. There's also a lot of obviously like best practices you learn in finance for how to approach models and stuff like that. That's definitely very applicable. And in general, like as an analyst or an associate, at some point you do get to kind of meet with different stakeholders, whether it be the company that you're pitching to or the company that you're trying to sell, or the company that you're helping to write a prospectus with. And so it's kind of honing your like communication skills as well, and it's definitely applicable. But you see a lot of very similar things, like trying to figure out valuation, trying to figure out a new industry. It's just, I guess, the difference of it is that everything you're doing in banking is mostly based on public markets and public companies, and kind of more established institutions.
Yeah, I don't really have anything to add on top of that. I've been in banking for like 2 months. So yeah, absolutely. You were spot on.
Right. So, yeah. So if you haven't been a founder yourself, how did you build the empathy and knowledge needed to support your portfolio companies? So I'm assuming, okay.
I'll go. So I think building empathy and knowledge needed to support portfolio companies comes with, for me, I had worked with a startup beforehand, and I had understood their pains in terms of cash flow and understanding the urgency that they worked with. So working within a startup does help. But when you do work in VC, I think you get to see, or you get to model yourself after the partners that work really, really closely with the startups. And if you're lucky, you may be able to see them on the boards and during the board meetings where they add a lot of value. So it's really been learning off the partners, and if you can get some startup experience yourself, understanding the dynamics that play there and understanding the urgency and what is really at stake.
Yeah, I really think there's no way to kind of replicate that experience. I've never started one. My siblings have, and tragically failed, and so I kind of saw it, but I can never imagine what it actually felt to be in that position. But I totally echo what he says. It's about, for me, the approach, I guess, is to listen all the time wherever I can, and to emulate what the partners are doing and how they're dealing with everything.
Yep. So for new founders looking for funding in the seed round this year, what would you want them to keep in mind, especially considering COVID-19's impact? And does this depend on your industry?
Oh, topical. There's a webinar a week about this one. I think in some parts, in some kinds of companies, or like in seed rounds, for example, I feel like lots of VCs haven't actually changed their approach or their valuation. Obviously, private capital valuations are affected by public markets, and public markets have taken some kind of a haircut, although in recent weeks, it's kind of been back on the up. So you would expect either valuations to adjust downwards a little bit just because markets were so hot earlier this year and late last year. Like M&A multiples were at like, it's been highest it's been in a while. So naturally, you would expect things to come down a bit. I think you'd also see a bit more of like protective mechanisms that VCs might want to include in their term sheets to kind of protect them better from their risks. So you can do a bit of Googling online, or I can share some resources, but it's stuff like warrants and multiple liquidation preferences, stuff like that. I haven't actually seen it myself, but I've been reading a lot of stuff about what VCs might do in this situation. Personally, all the rounds that I've seen and the ones we've closed in recent weeks were kind of built before COVID happened. So I haven't actually seen the impact of a round yet.
I haven't actually seen the impact of it around yet either. We haven't made any new investments since COVID-19. I guess what you would be keeping in mind would be potentially considering a convertible note structure where the valuation isn't cement. That way it's easier to digest for the venture capitalist that's investing you. For seed funding, I think because venture capital is usually seen as a long-term investment vehicle, there is some leeway for seed investing, but the current environment with its uncertainty, it's really hard to say. I haven't really been seeing much activity on the seed front. It's mainly been on the Series A and Series B front that have seen activity. Yeah.
Yeah. So are there any interesting trends in the space that has captured your attention recently, and why? And any companies who are operating in this space that you're following?
I would say kind of echoing what Kevin said earlier. It's pretty front of mind, like telehealth and how it's making access to healthcare a lot easier for lots of people. I personally became a client of kin fertility myself because I was like, before I was like, oh, I don't really need it. Now I'm like, wow, I really understand why people would need this. And it kind of, like, I live in the city, so I never experienced the problems of lots of like people not being able to easily reach healthcare without being like an annoying part of their day. And now I'm like, oh, this has opened my eyes to like such a huge problem that lots of people have been having for ages. So that's, I guess, an interesting thing, and Kevin talked a bit about it earlier. And in general, I'm interested in like clean meats and that kind of space. So lots of private companies that we've been looking at and have invested in. I think it's really important, and I was always quite ignorant to that, to kind of like environmental friendliness, and recently being part of Blackbird has kind of opened my eyes to lots of issues that we'll face in coming years, and part of the answer, I think, is in clean meats and the biotech aspect of food.
Yeah. For me, I think I personally have been looking at edtech solutions. In this time during COVID-19, I've been trying to do some online courses myself, and I've been looking at the edtech industry more broadly. I think we're seeing much more volume pick up with people having more time to learn online, and I guess just general behavior online, general consumer behavior shifting to a more digital focus. My brother's doing his HSC right now in year 12, and it's been a really strange time for him, seeing how schools are shifting online and how they aren't really doing it effectively. So I'd love to see solutions on that front to help my brother and other students in the K-12 arena do better in this environment.
So, and the last question is from Erica. Do VCs have any standards regarding cybersecurity for their staff? especially when startups IP is quite unique?
Yeah, I'm not sure what it's like across most VCs, but I think it's a general part of your typical due diligence. There's usually like a set bunch of questions and criteria you'd want them to hit, but it usually gets pretty like legal, DD-esque.
Yeah, it's not front in mind. It's usually more a checklist aspect for us. Really is just sometimes submitting a file on your tech stack, what that looks like. Other than that, it's not ever really that extensive unless it needs to be, unless you play in that space where data compromises could be really costly to the startup and to the investors.
All right, so are there any further questions? No, okay. So that is a wrap. Thank you so much to Hart and Kevin for informative insights into VC, for sharing your career journeys and your thoughts on the current economy.